We're live here. I'm live everywhere. Good afternoon. This is Roman Shersher with your weekly update, the BIS weekly update. 914,810. California just printed an all-time new high, new record median home price. But here's what nobody is telling you. The $2 million and up segment did most of that buying. The middle market sitting on the sidelines. And rates actually dropped this month to 6.57%. The buyer demand fell anyway. As I mentioned, I'm Roman Shersher, your weekly buy, invest, sell update. It's been a few weeks since we did this. This is your fastest 12 minutes in real estate. Today, the new record, the luxury middle divide, the rate cut that just got killed by the jobs report, our Jacksonville market was just flipped to a positive note, and our Hidden Hills neighborhood spotlight. Let's go. All right. A lot of cool stuff to go over today. Okay. Sharing window, share. Let's do this. All right. California home prices hit a new record high. They hit a new record high of 914,810. This is the first time that it's been over 900,000 since May of 2025. Now, closed sales are still low. 275,580. That's up 3.9% month over month and 4% year over year, but we're still below 300,000 for the 43rd straight month. 43rd consecutive month. The volume is structurally constrained. We are not really at a vibrant pace of sales. And a lot of those buyers are the middle tier buyers that are sitting on the sidelines waiting for these rates to fall down. But it's the $2 million segment that jumped significantly. It jumped 8.4% year over year. Biggest gain by price tier, and that's really what's driving this median increase. Stock market record highs. Early April rate dip pulled high-end buyers a little bit more off the fence. And national luxury data confirms the same thing. Pending luxury sales rose 4.3% year over year nationwide. The biggest jump since January of 2025, actually. New luxury listings up 2% year over year versus 0.6% over non-luxury. So more luxury homes are coming to the market. Why? Because they're getting eaten up. Top luxury price jumps are significant. In Tampa, the luxury jumps went up, price jumps went up 17.1%. Vegas, price jumps went up 16.1% in the luxury market. Kansas City, up 15.2%. San Francisco luxury pending sales up 48.4% year over year in April. Okay, AI has a lot to do with that. All right, let's take a look at what's happening with the mortgage rates, and I'll give you an exact mortgage breakdown as I always do towards the end. But what we're looking at here is that new mortgage applications dropped 2.5% week over week for this article that was dated June 3rd. The 30-year fix decreased from 6.65 down to 6.57. It's risen just a little bit since, with points easing slightly, and refis fell a little bit. But rates aren't the only thing that are keeping the buyers out. The rates actually dropped this month. Buyer demand dropped more. Okay, the middle market freeze is about the payments, the prices, the insurance, and the confidence, and it hasn't been there. Now, these are older articles. Yesterday, Trump came out with an announcement that Iran is coming to a close. I believe that is definitely going to ease energy prices, and as energy prices come down, rates should come down. And we'll talk about what is holding the rates, what will hold the rates back a little bit. We'll see how long it holds, depending on the market data that comes out. But all of these things are positive notes and positive factors for rates coming down eventually, which will increase that buyer confidence. Okay, let's talk a little bit more about that jobs report. Okay, as I mentioned, luxury housing market surges while the middle market buyers stay sidelines. This is an article that confirmed exactly what I was saying here. Okay. Now, there's a jobs report that killed the rate cut. I'm trying to find it here. I don't think we pulled it up. The May payrolls report is what actually is going to really hurt us in terms of lowering that interest rate. May payrolls came in higher by 172,000, which means that 172,000 jobs were created versus what they thought was 88,000. So that's nearly double the expectations. March got revised up also by 29,000 jobs up to 214,000. They do this. They do a revision once they get more data and look backwards. The April one was revised up significantly as well, up 64,000 jobs to 179,000. So the 3-month average is above the 188K even. Unemployment is only 4.3%, third straight month. Long-term unemployed is higher. But the point is the labor market is too strong for the Fed to cut rates right now. And on top of that, our CPI hit 4.2% in May. That's the highest in 3 years. So inflation also a little bit on the higher side. Jobs market is on the higher side. It's not a good formula for rate cuts. Okay. The CAR president said that while elevated mortgage rates and ongoing uncertainty in the Middle East continue to weigh on the market, California buyers and sellers are still finding opportunities. That speaks to the underlying strength of the housing demand. We have decent demand, but we're still not, our volume is not where it should be. Our volume on peak times, like right now is the summer, it's an anemic summer so far. Our volume shoots in California to an annualized level over 400, up to 450,000 units. We increased to 200, what was it, 200 and, we increased to 275,000, okay? So we're off by still 30-40% off our typical amounts, okay? So does not hold well for rate cuts, the job reports and the inflation numbers. So if you've been waiting for the Fed to bail you out, that wait, it just took a little bit longer. And 2/3 of the traders now think that the next Fed move might actually be a rate hike, which tells you, focus on the home. Stop focusing on the conditions around the home, like inflation, like, oh, I don't like that energy prices are high. I don't like that my rates are high. We're getting low rates for our clients, much lower than these market rates because we're getting the sellers to pay for a buy down for them. The key is to find the right house. Buy the home, and then we'll figure out the terms that work today. Don't try to time the bottom, or definitely don't try to do it when you think the conditions are right in the market, because guess what? They're not just right in the market for you, they're right for the other person. And a couple of years ago, that right for the other person meant that these homes were selling at $200,000 above list price. Okay, way better to get a nice discount to the current market value with paying a little bit of a higher rate that eventually you'll refi not too long from now. Give me a call. Let me run that analysis for you so I can show you exactly, hey, here's what you're looking at. Here's where the rate will price you at in the future. When rates fall this much, this is where you're going to be. You're going to drop from $6,000 a month to $5,000 a month. But look how all the money that you saved, because right now I'm getting you this discount plus I'm getting you a rate down, buy down. Let me do that analysis for you and then make an informed decision. You want to sit on the sidelines, wait, fine, but at least be informed and ready to go when the time is right. All right, a quick update on Jacksonville. Jacksonville flipped the script. After months of cooling, the May data shows that prices are now rising. Inventory is edging up a little bit, but it's staying tight, and days on market, most importantly, are dropping. So the buyer leverage window really narrowed. And as you can see, the prices from May have gone up. Our closed sales have gone up in 2026. And days on market have decreased. And so everything's looking sweeter there. Our median rose 5.1% month over month. And you're seeing more multiple offer scenarios returning on the homes in Jacksonville. the well-priced products. So definitely it flipped 2 months ago. This was a buyer's market. May data shows the prices are up. There's a market down, inventory tightening. Window for easy negotiations in Jacksonville coming to a close. If you're sitting on the sidelines at Jax, really recommend coming back in the market. All right, our mortgage numbers. 30-year fixed currently is at 6.58. When I gave you the last update, we were at 6.62, so we're dropped 0.4 basis points. But as you can see, it's kind of slowed here. And we're waiting for other things to bring it down. And we'll see what Iran does with the new announcement. We'll see when the actual completion of that, of the agreement occurs, and what it does and how quickly for the market. Our rates on the 15-year fixed have actually increased. We were at 6.09 to 6.14. Jumbo as well, from 6.68 to 6.84. FHA stayed about the same, 6.15. It's now 6.14. And VA say around the same thing, 6.17 now is 6.16. All right. And now with our neighborhood spotlight of the week, I have here my co-host, my partner, my wife, my partner and in both life and in real estate, the lovely Liana. All right, what's happening in Hidden Hills?
So our neighborhood spotlight for today is Hidden Hills. It sits in the western San Fernando Valley, just off the 101 between Calabasas and Woodland Hills.
It's hidden.
Hidden, yes. And it was designed in the 1950s by A.E. Hansen, the planner behind Rolling Hills and Palos Verdes Estates, all the way on the other side. Incorporated in 1961 as the 73rd city in LA County, 1.7 square mile total area, population only 1,725. So when they say exclusive and hidden, it really is. It was also designed to preserve a rural equestrian way of life. There's no street lights, no sidewalks, 25 miles of brindle trails, and 3 community riding arenas, whitewood fencing throughout, and 1 master gated community with 3 guardhouses. Pardon our little puppy dog. So as far as real estate, typical transactions in Hidden Hills, they range from 5 to 15 million. And there's a couple outliers that go above the 20 million mark, even as high as 35 million. There's usually 4 to 12 listings at any given time, and a lot of transactions go off the MLS, off market, discrete deals. That's what we are known for. We have a list of exclusive off market properties that we are happy to provide and share with you guys. If you are interested, please send us a DM or a message or call us and we'll get you on that list. My favorite part, dining picks. Coming from the culinary world, we have some exciting news. I shared a little while ago that a famous restaurant is getting a second location, Shibuya. I do food blogging, and it is my #1 sushi restaurant in all of Los Angeles. That is a big statement, and I truly mean it. And they are now opening up a second location. It is coming soon. I got an exclusive sneak peek at the inside. It's beautiful. It's definitely modern and upgraded. It's still small. It's not a lot bigger than their other location. You do have a nice big bar, but super excited. That should be announcing their opening at any time now. We are waiting. And most importantly, they're going to have a to-go counter. COVID was the best time for Shibuya because they offered to go. That was the first time that Roman got to try.
I don't have
Shibuya.
the patience to wait in that line.
Yeah.
The takeout was the best.
Yes,
allowed me to experience Shibuya and gave me a little bit of patience. Now I can wait in that line a little bit.
Yes, now it is worth waiting for after he got to try. I went to school out there in Woodland Hills, so I would have Shibuya quite often, but during COVID when they were offering to go, it was the best thing ever. So definitely keep an eye out. I will definitely announce the opening when it's ready. And then as far as restaurants, there's no restaurants in Hidden Hills. It is a small area, just residential.
It's residential.
Yeah, so the closest area would be the Commons and where, Shibuya is located. And
which is in Calabasas.
Also in the Commons, we have a trifecta of openings. From the makers of the Sushi Nozawa group. They make wovo, kazunori, sugarfish has always been there. It was a staple in that Calabasas Commons area, but now they have opened Matu, Cheesesteaks by Matu, which is a spinoff from the restaurant. They only serve their famous Philly cheesesteaks, and they are to die for on their sesame crunchy bun with the spicy pepper. So definitely.
That's already open, right?
Yes, that is already open.
I think I know where we're going for lunch.
They opened in Pasadena, and now this one is open as well. And then right next door is Hi Ho Cheeseburger by the same ownership group, and they specialize in Wagyu cheeseburgers, so definitely more fancy than fast food.
I think I know where I'm going for dinner.
And you also have a new opening there at the Commons, Superba Food and Bread, casual brunch spot, great pastries, very light, airy food, definitely great to grab for brunch or on the quick, on the go spot. I used to go to the Pasadena one when I was in culinary school, so. Calabasas Commons definitely revamped, and that is all for the dining.
All right. Thank you, the lovely Liana.
Thank you. My pleasure.
All right. Quote of the day by a well-known gentleman named Warren Buffett, CEO of Berkshire Hathaway, built generational wealth by understanding the businesses and the assets he bought, refuses to play in markets he didn't understand. He's one of the most quoted investors in modern history. And the quote is this: risk comes from not knowing what you're doing. Okay. In a market here where we have record prices, conflicting inflation signals, a hawkish bond market, jumbo rate that just blew up by another 16 basis point, a high-end segment that's doing all the work, meanwhile the middle is still on the sidelines. The people who get hurt are the ones who confuse activity, okay, with understanding. Know your numbers, know your comps, know the carrying costs, know which buyer demographic actually exists for the particular property you're trying to sell, for that price point even. The risk is in the market, it's transacting in the market you haven't studied and you don't know. All right, well, this week's takeaway: California just printed a 914,810 record, median price record. Luxury is surging while the middle market hides. They're sitting on the sideline waiting. What are they waiting for? I don't know. Jumbo rates just spiked 16 basis points, pretty significant. And one of the reasons perhaps is because a lot more jumbo is coming into the market. And the Fed cut you were waiting for just got killed by the jobs report. So share this video with at least one person who's house hunting, thinking about selling right now. DM me a guide for your free buyer guide. I have a free buyer guide a book that I put out on buying like the volume purchasers do, saving tens, if not hundreds of thousands of dollars on your purchase. I'll give it to you for free. Just send me a message, an email, a text, whatever you want. I'll be glad to email that to you. I got a link in the description. And also, if you got value from today's update, please hit subscribe, tap the bell. I drop this every single week, every single other week, so you never miss a rate move or a market shift. It's free. It takes 2 seconds. And guys, if you like this video, once again, please share it. I really appreciate the amount of time that you spent with me today. Your quickest 12 minutes that actually ended up being a little bit longer today, but we had a lot of information to cover. We haven't done this in a couple of weeks, so I appreciate you spending the time. This is Roman Shersher, your #1 online resource for buying property with your buy, invest, sell update, June 12th, 2026. Have a great weekend.